Good morning, everybody. It's Chris here from Serene Education with the 4 Majors Notes update for the 11th of March 2013. Hi, folks. Hope you've had a fantastic weekend with family and friends. After non-farm payroll on Friday, leading up to Friday, in particular Thursday and Friday, we had a lot of action, and you could see just looking at my euro against US dollar chart in front of me how much action we did really have. Let's have a look at the weekly chart to start with. So you can see last week's candle, very much seeing a lot of sentiment to the upside to start with at 1500. Price moving right up to this price support and resistance level. Price actually finding support for a second consecutive week at the 1300, a psychological round number. Everybody talks about these round numbers. Traders prefer trading around numbers. 1300 is a really good one, and it has been a significant support and resistance level in the past, and you can quite clearly see that price actually found a bit of support through the first part of the week. However, we've seen price actually falling back towards that level. So price on the weekly chart looking very negative and trading at the bottom end of the wick at that 1300. If I show you the daily chart of that particular week, you can quite clearly see how much action we had. We had a lot of ups and downs. Friday, very indecisive. After non-farm payroll, we saw price really moving higher, however being capped, and we saw price taking it all back. Thursday, very bullish engulfing candle. Wednesday, very indecisive. So you can see quite clearly price ranging the whole of last week. Very messy indeed. We did see a genuine break of 1300, but we didn't see price actually finding some resistance at that level and kicking onto the downside as we presumed it would. It pulled back on us. Favorite. So really good news through for both the US and the European session has seen price moving backwards and forwards quite aggressively. So what do we want to see? It's still looking negative. The daily is still pointing to the downside. We are finding resistance currently at 1300. Sorry, support at 1300. We need to see price moving away from that, and the sooner she moves to the downside away from that in the direction of the overall trend, as you can quite clearly see here, then we should see price heading towards that magical 128500 mark, towards the price support and resistance to the downside as our first target. However, we need to see a bearish engulfing candle. Of that, we need to see price now spending more time under the 1300. What is it doing on the 4-hour chart? Quite clearly see a lot of hesitation to the end of Friday. A lot of negativity to start with from the non-farm payroll announcement on Friday afternoon from the 12 GMT, the 2 o'clock GMT time on the European session. We saw price moving very aggressively to the downside. However, coming unstuck at 1300 yet again, and price finding or looking very undecisive at this level. A lot of indecision in the candlestick formations, a lot of spinning tops, pin bars, not looking all that great. And all importantly, you can see prices now very tentatively testing that 1300 as we speak. So not looking really good at the moment. We do need, however, to see price moving away from it, and the further away from that she goes, the sooner the better. In this case, very much to the downside. You can see the institution moving average is above price, as well as our shorter term time frame. So everything's looking negative at the moment now, but we need to see 1300 being now the new resistance level and price falling aggressively through this week. The hourly, quite clearly see since the close on Friday night, over the open of the Asian session last night, price moving tentatively to the upside, but not with a lot of momentum. The last hourly candle seeing a bit price moving slightly higher and pulling back towards that 1300. We do need to see price now actually staying above 1300 to see any potential upside movement intraday towards at least the 13050 mark intraday, back towards our 200 period and our 50 period moving average. You can see that there is a buy setup over here. You can see we've seen higher swings so far through the hourly at the 1300. However, we want to see a nice bullish engulfing candle to confirm that price is looking very supportive at this area to see any price moving higher. Failure to do so, we see a bearish engulfing candle closing lower than the current lows intraday at 12970. Then we should be looking south for the foreseeable future towards those 128500 marks I mentioned earlier. Onto sterling. Let's have a look at that weekly chart. Here again, like its European counterpart, a lot of indecision, a lot of speculative trading throughout that day, or that week, apologies. But you can see quite clearly price is now clearly broken below that fib projection level that I spoke about through the past week. That 100% extension of that move that we saw way back in early January. You can see that 100% has been was reached the prior week, and last week you can see price moving between these 2 points on our daily chart. Moving towards that 1485, which happens to be our long-term support and resistance level. Here you can see it consolidated back in 2010 in particular. But our long-term goal would be the lows that we've seen here roughly around the 1445, well below 15300, and you can see that the weekly chart all looking negative according to our CTC strategy template. Here you can see on the daily I've put in that 15300. You can see that this is where it all started, way up here in early January, and you can see prices have been moving to the downside. The histogram, everything's looking fantastic for this particular trading tool, and you can see a nice break, the pullback, and then the continuation. Here at 1505, etc. This area over here is the fib 100% extension here at 1505. This weekly fib 78.6 retracement over here at 15200 was that level. You can see price actually finding resistance here, and the more like the longer price actually found resistance here, it told us that the initial breakout was very, very strong, so there would be very little pullback, and sure enough you can see that hesitation, a lot of hesitation through here. Almost saw a full week of hesitation, and then price dropping really aggressively through the latter part of last week. In particular, on Thursday, we had this very indecisive candle under 1505, and as long as it remained below 1505 in our intraday time frames, there was more likely for price to continue to the downside. And sure enough, on Friday, we saw price heading lower, but heading into that 148500 now, which is our long-term support and resistance level here. So we want to get below that before we see price making any further lows to the downside. And you can see if I just pull out, you can see where she is now. So those 2010 lows, get below that, then we're looking down here at that 1443, 1445 mark. There is a lot of support at this area over here. So there's a lot of momentum when we get below that area. So 1448, that 1485 mark, apologies, was very significant. You can see quite clearly, very indecisive as she's moved lower. Very aggressive to start with towards the start of February, but you can see tentatively moving below 15300 now, which happened to be that major support and resistance level. So my hourly chart, my 4-hour chart, you can quite clearly see a lot more red across the board. 1 or 2 areas of blue, but you'll be trading against the underside of the 15300, against the market sentiment, which is a no-no in trading. And you can see quite clearly that price actually is still looking negative. The major trend is still negative because the institution is still above price, and as long as that maintains intraday, then we should be looking for negative sentiments. There we go, nice bearish trend intraday. You can see swing lows. Here's that 15300 on major support and resistance level. You can see quite clearly here that 1505 is that 100% fib extension projection, apologies, on my weekly. Price coming back on Thursday and Friday, testing it, and then falling away quite aggressively at the 2 o'clock GMT start of non-farm payroll figures coming out. So very aggressive. However, you can see near term on the 4-hour, very indecisive, consolidative, and as long as that maintains, then we should also remember we got that 148500 mark just below us as our target. You can see quite clearly it's still there. It's within grass. We would need to see a nice bearish engulfing candle close lower than the current consolidation here at the 1490 mark. So take a nice round figure, 1490. Make an alert on your preferred trading broker platform. Get an alert signal close, ideally on an hourly or 4-hour in particular. 4-hour would be great. Close below this, and then we should be targeting to that 148500 long term. On to the US dollar Swiss franc. Let's look at this weekly. Okay, the US dollar really getting a bit of mustard now against the Swiss franc, and you can quite clearly see the past 2 weeks very bullish indeed. I was a bit hesitant in trading this at first because of the fact that we're trading into a very strong consolidative range here between the 930 and 940 mark. Very, very hesitant. Don't want to be trading speculative, and also there's very wicky part of here. I want to see a nice break above the 940, finding support, and last week's candle finding support above that 940. Very, very important. A nice bullish engulfing candle. So now a bit of clean air between where we are now and the next protocol. Let's take the all-time high we saw just before the 1000 mark back in, was at the end of July, to the low end we've seen just here at the start of February, and you can quite clearly see that the 50% line here, this blue line, I can change that color just so you guys can see it. What I'll do is I'll make it black and quite aggressive. There we go, so it sticks out. The 50% line, okay, the fib projection, retracement, apologies. You can see the price now above it. So what we want to see now is price finding support above that level. So if you just take a ballpark figure, roughly around the 950, got to maintain above 950 now for the foreseeable future. Looking at our daily in particular as support, to see price kicking on towards that 960, which will bring us just short of the institution moving average on our weekly. So got to make a note of that. There you go. You can quite clearly see that my fib line's been put in. These dashed lines are the weekly the retracement areas from the current high that we saw back here in mid-July to the low in February of this year. You can see that price is now trading above this price support and resistance level here at 950. She's got to remain above 950 now to see price kicking on towards that 960 mark, get above 960, then heading into that 97500 mark. So intraday 950, very, very strong support. There we go. You can see my red line is now my 950. You can see price on our hourly chart very hesitant, a lot of wicks to the upside, and the price has fallen back towards this level. Overnight session on the Asian session, very, very indecisive, trading within a very tight range. However, as long as she maintains above 950, who's looking good for support, and you can see quite clearly the histogram on the other side is looking very positive. All the moving averages below price supporting her. We just need a nice bullish engulfing bounce now at 950 to see price moving higher for the remainder of this week. So very, very important. Wait for the bullish engulfing candle, guys. Hourly, you can quite clearly see very, very indecisive candles, a lot of wicks, but as long as it maintains above 950, happy days. So bullish engulfing candle here, a nice close above 954 in particular would see price looking very, very positive for the near term, back up towards those highs I mentioned, in particular towards that 960 mark, which is our daily high at the moment. Now, get above that, then we should be looking at the 975 before 1000. Long term should be our long term target for this particular pair. Onto the US dollar Japanese yen, and you can see very, very positive indeed over the past couple of months, in particular, well, since October of last year. Very, very positive for the US dollar against Japanese yen, breaking these. You can see I've got a monthly chart here on the US dollar Japanese yen. You can see I've taken the all-time high back in 2007 to the current low here back in 2011, 2012, and you can see the Fib projection or retracements, apologies, 23.6 here at 87, price trading into that not too long ago, and then breaking above it, and then trading into the 38.2. We saw price hesitating at 38.2 for a full month, and then you can see the breakout that we've seen currently, and that's reflected on the weekly chart. Yeah, 9400. Let me just put that in so you guys can see. That's that 38.2 area here. So very, very important that you guys mark these major support and resistance levels on your larger time frames, because those will give you clear indications where price is likely to go to. So 9400 here on the weekly, very, very strong. Fib 87 was the prior one, the 23.6. You can see hesitation, getting above it and then trading up towards 94, which happens to be our 38.2. A lot of indecision that week, and you can see last week very, very positive indeed. Bullish engulfing candle above 9400, very, very important. Now she's above 9400. She needs to kick on now, and in that respect, if she's well above the 9400 now, she'll now move towards the 100 mark, which is our 50% Fib retracement area here, which happens to be a prior consolidation through 2008 and 2009 in particular. A lot of support and resistance through there at the 100 mark. So daily, as long as she stays above 94, you can see a lot of resistance. Nice breakout on Thursday in particular, and then Friday moving higher. Fantastic. The US dollar moving higher. Fantastic figures coming out from non-farm payroll on Friday really, really helped the US dollar gain further ground against its counterparts, and especially against the yen. And you can see quite clearly we have a now buying signal here, and because the prior one was a negative one, because we're still trading below the resistance here at 94. Now we've broken above, it's giving us a clear signal. Now we can get back in again to target those upsides. Looking for a potential buying signal. That again, you can be quite aggressive. You can see quite clearly we had a nice buying scenario here before we went into 94, pullback and then continuation. If you were trading that, then you would have taken, you would have easily seen, apologies, I've taken the wrong one here. My apologies. I just got to get this. Okay, I got rid of the line. You want to do a Fib projection. So you saw the buying sentiment going into 94. You could take in the lows here to the current high just before 94. Then the pullback, you can see to this little one consolidation. You can see 100% at 90. What's it? 95.60 and change, or gone for 95.50. You can see price really heading into that 100 now. Needs to stay above 100 before we see price kicking on to 161.8, which is well overbought. But you can quickly see, if we're going to use that as our intraday support, then 95.70 needs to be the low point of that pullback. So very, very important. You can see quite clearly 90.70 here, moving higher. So I've taken the all-time low on the hour, on our 4-hour charts from these lows over here up to this consolidation to the downside, and you can see price 100% way out 95.50 has now been reached. We've seen a pullback and seen price moving higher again. and you can see the last 4 hours very indecisive at a prior resistance level. So very, very, very important that price maintains above, in this case, above that 96, which happens to be the 161. So 161, the 123.60, which is the first port of call after the 100, working our way to that 161.8. It's imperative that we get above the 123.60 fib projection here at the 96.10, ideally 96.2, to see any further extensions. You can see the last 4 hours very indecisive, spinning top at this level here, so not really wanting to get into that. The last arrow was a red one, so telling us we should be looking for potential hesitation at this level. Notice we are still seeing all the moving averages below price, which is the positive sign. Histogram on the other side is all positive. The trend is still very much upside, very aggressive trend to the upside, very strong and very aggressive up move, at least a 70% angle. So imperative that 96.2 gets breached as soon as possible. If not, we're going to see resistance here, and where price is going to move back to, potentially back towards 100%. That's where we've been to. Okay, that was price support. That was our 100% extension previously. If it fails here at the the 123.6, then it's ideally likely to pull back towards that 95.50 again. So it's imperative to see any further extensions upside. Need to see a bullish engulfing candle. Failure to see that, we could see price ranging, and if doing so, she'll move back to where she pulled back to previously, which was here at 6 o'clock GMT on Friday at this level here at 950. So very, very important. See a bearish engulfing candle here, look to the downside. See a bullish engulfing candle, then look to the upside towards that 100% or 100 mark for the foreseeable future. Okay, guys, so that's it for the analysis. Okay, very, very important. Make sure if you're using this template to please follow the rules of it, and if you please using it or using any particular trading strategy out there, please back it up with sound money management rules. Very, very important. Okay, it's so important to make sure that your money management is spot on. If you don't get it right, then it's pointless having a fantastic trading strategy that's going to give you no return. So very, very important. Back it up with sound money management. Other than that, keep it simple, guys. Make a note of your major support and resistance levels. I do it so in my weekly, and then plot those lines intraday to give me an idea of where price is likely to go to for the foreseeable future. It's very, very important to understand what the institutions are doing out there and where they're taking their profits or getting into trades, because they will in turn help with momentum, and that's what we want to trade. As traders, we want to be getting onto that momentum as soon as possible, and the earlier we get into that momentum, the more likelihood is we're going to be a lot more profitable going forward. So we don't want to be trading speculation or speculativeness, so we don't trade any wicks on any time frame, guys. So if you're trading a 5-minute chart and you see a lot of wickiness on a 5-minute, rather back out and look for a nice bearish bullish engulfing candle, a confirmation candle. That's what we want to trade. The more decision, the more decisive a candle is, the more likely the price is going to follow through on that particular time frame. So stay away from the indecisiveness, stay away from all the speculativeness out there. Give that to the bottom feeders. I call them bottom feeders because that's what they do. They're trading out there with very little knowledge, very little, no game plan, and we don't trade like that because we have a game plan. We are following a strategy, and we want to follow the rules. So very, very important. Other than that, I'm going to leave you to it. Have a look at the news to see if there's anything out there that's really going to factor in today's trading. We've got the European French industrial production figures have just come out, month on month, and negative. They were expecting no change, and it's come out, and there has been a major negative change from the forecast. They were expecting a negative 0.1%, and the actual figure came out at negative 1.2, so very, very negative. Actually dropped 1.1% to the downside, which is not good for the French industrial production figures. That will probably play out on the euro this morning. Not much else for today. Very, very quiet day after non-farm payroll, but have a look and see what non-farm payroll did. Get an idea of what she's doing, what those figures did for the week or last week. See where price is trading on those particular trades that you're interested in, and take it from there. Otherwise, have a fantastic trading day, and I will see you again tomorrow. Until then, trade serenely.